Hi and welcome to the Market Alert for Monday the 4th of April 2022. So German retailers to increase food prices by 20 to 50% on Monday. The knock-on effect to inflation is obviously going to be catastrophic. Mind you, it won't be, will it? Because let's face it, they don't put the food stuff in the inflation numbers anymore. It's lip gloss and disposable cameras just to give that smoke and mirrors effect that everything is fine and inflation is only actually 8%. And not running around 20%. And now this actually confirms, and it's in writing, that they're going to actually increase. And it isn't going to be all food items, of course. But again, it goes to show you that hyperinflation is of the day for the central banks to hyperinflate the debt away or attempt to do so. So yeah, no surprise when I saw that headline. Again, just confirms the conspiracy theory that becomes a conspiracy fact. Banks battered and trannies trounced amid yield curve and commodity carnage. This continues. There are now 13 inversions across the Treasury yield curve, with the 2s and 30s finally snapping. That's the one I tend to watch. Actually, no, I think it's the 10-year 3-month is the one that I tend to keep an eye on. But the 2 to 30s finally snapping as well. Won't be long before the 10 to 3-month as well. Yield curve inverts dramatically as Goldman sees recession risk soaring. Yeah, it's around 18 months following the inversion. Maybe quicker this time though, of course, especially when you see the main headline of 20 to 50% increase in inflation. We didn't have that the last time the yield curve inverted. 2s and 30s just inverted for the first time since 2007. So you can see all of the crosses of the yields are now starting to become inverted. Friday's non-farm payroll was a bit of a damp squib. March payroll's fewest jobs added since September, but wages come in hot. Yeah, because inflation's going up and people wanted to see a wage increase. Otherwise, they'll never live. I think we've already never looked at this one. Well, we'll just have oh no, this is following the news. The 2s, 10s invert, stocks sink after unemployment rate tumbles, earnings jump. I thought we'd seen this one again. There's so much on the inversion of the Treasury yields at the moment. Rate hikes odds are rising as rate cut odds after that. So what we're saying here is basically rates to go up and then they're going to be cut. Well, of course they are. Going to keep the illusion alive. Looming freight recession sparks plunging trucker stocks. First post-COVID job losses, again relating to the non-farm payrolls. Too many trucks chasing high-paying spot freight and high load volumes there. News for this week. What have we got today? Not a lot. Bailey speaking today. He's been downgraded. 10.05. Don't know why he's gone to a medium impact news item there. What else have we got this week? ISM. Got a Fed. FOMC meeting minutes for this week. It's not about the rates. This is about releasing the last minutes, I think. And then Thursday, Bullard speaks. But certainly light on news for this week. And the gold-silver ratio, well, it's actually dropping overnight. Silver's moving higher and or holding ground, I should say, and gold down slightly. So silver managing to pick up a bit there. Meanwhile, on Friday, we saw the non-farm payroll numbers. The market trading down to 78% in the daily chart, with some buying coming into the market and starting to move higher on the overnight. So from the high to the low, these are your upside targets should the market continue to move to the upside over the next few days. And there's no reason why, because it's gone all quiet on the war front and crude oil's calmed down a bit. So the market is free to move to the upside. There really isn't anything apart from something from the war zone that would actually spark further downside selling, to be honest with you. I can't think of anything. There's no economic news to actually speak of. So the market's free to move to the upside, and like I say, unless there's something geopolitical that comes out. Friday, you can see from 2:30 that the Dow wasn't happy with the non-farm payroll numbers, traded down to the S1, and then the market bounced with assistance from the plunge protection team, but overnight the market's bounced off the DP there, oversold. Demand turning green, crossover, and heading back to the high of Friday, where I suspect that we're going to go to in the pre-market future session. In the German DAX, a very similar picture here. You can see the market moving to the upside overnight as well, and heading back to these Fibonacci retracement areas. Watch the 50 bar and the 5 MA as well. They come in around, let's just widen this up so we can actually see, 38% for the 5 and just above for the 50 EMA there. So we need to take out these levels moving to the upside. Like I say, anything from a geopolitical standpoint to send the market lower. Watch the 78% retracement that we already have in there, where it's been used as twice so far as support for the German DAX. In the 30-minute chart, you can see that very choppy, waiting for the non-farm payroll figures on Friday, and eventually they came out and the market followed the Dow lower until we had demand oversold, crossover, and then the market recovering. You can see the retracement here. Nice retracement there, and the market moving back to Friday's high and likely to actually go through this as the 7 o'clock futures market opens. In the 5 minute, as I say, very choppy session during Friday. You can see this here. The market rallying up to the BRN here, then back, and then just getting into a sideways move, breaking out, and then stuck in this 100-point range, and then going into a 50-point range or less, waiting for the non-farm payroll numbers, which came out, which you can see here. They came out here. Just find it there, so you can see it moving down. The market managed to retrace and then became overbought, and then we kicked off with this bar for the afternoon session down to the BRN, back to 78%, and then back down to the 200 MA where the market was oversold, found some support, then came back 50%, 62, and then started heading down. But a choppy session for Friday there. Let's hope today has a bit more direction. Overnight there you can see how the market has played out nicely. We had a bit of a shakeout here with the momentum moving to the upside, which is why it's showing divergence there. The momentum shifting. Market up to the BRN overbought, and then the market coming back to oversold with demand. You can see all the Ds there, and then moving to the upside despite being overbought with some divergence. It's just a matter of a couple of red bars and then the market switching back, maintaining that move to the upside, which of course if we go to the bigger time frame you'll see there we were moving up very strongly. No crossover yet in the 30-minute. In the currencies, let's just have a quick look. The yen trying to make its way back despite the intervention of the Bank of Japan last week to suppress the JPY, but it's not worked, and the market now starting to move to the upside because of the devaluation of the dollar. The 30-minute also showing this overnight as well, moving up strongly after a move down during Friday's session following the NFP numbers. In the pound, and the daily chart also attempting to move back to the upside at the moment, but still in a very much of a range, oversold, so due for a bit of a move to the upside there. And in the 30-minute of the pound, again, reaction to the non-farm payroll numbers, you can see they're moving down, became oversold, then we get the retracement, market starts to move back, but not a great deal at all. Very, very quiet for the pound during Friday's session. And finally, let's have a quick look at the metals. Starting off with silver, we can see this, not silver, this is crude oil. Like I say, it doesn't look right to me because normally they're hammering silver, aren't they? Crude oil, they've rolled over to the July contract on ETX. I don't know why July. N is the symbol for July. I thought they would have gone to the June contract, which is M, but they haven't. They've gone straight to July. It's the only one I can find, but it's $103. It'll be a lot more expensive on the nearby contract, which you can pick up from CRB data or any other data source. But for the market alert, we'll be using the July one, which we can still see gives you a pretty good idea. It's over $100 a barrel, whichever way you slice it. Silver. This actually is being allowed to move up today. We've got a bit of demand for Friday. No major sell-off. Tomorrow I'll introduce you to the new CTFC commissioners and their background. You couldn't make it up. You really couldn't. It's fascinating to see who they've put in place to actually regulate the banks and where they came from. I'm probably giving too much away, aren't I, already? But we'll have a quick look at that tomorrow. And then in gold, you can see, as I said, when we looked at the gold-silver ratio, this is down slightly. I don't know why, but it is. Yeah, I mean, it's sideways. It's not really selling off and just trading in a bit of a range there until it needs to make the next move. And, of course, Putin's pulled a brilliant one on the West by pegging the price of gold to the ruble, which the gold is traded in US dollars. You can't really make this up. And then forcing everybody, if they want the gas, to actually pay in US dollars. And I noticed there was an article overnight on Saturday showing that he's going to turn the gas off in Europe as well if they don't pay in rubles. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.